Have you ever considered how higher inflation affects economies? An economy may experience difficult times during inflationary periods, particularly if the inflation rate is high. When there's inflation in an economy, there's too much demand for the goods that are available. There are many different causes of inflation, and the level of inflation varies according to the cause. Even so, there are situations when the interaction of market forces and policy can result in inflation. Are you familiar with the different types of inflation? You'll learn more about this in this video. But the question still remains, what are the types of inflation that can affect an economy? How does higher inflation affect an economy? Is there any benefit accrued to inflation? Let's know the whole story. But what are the types of inflation that can affect an economy? When inflation affects an economy, its degree of impact is reliant on the type of inflation. There are four major types of inflation, and the first is creeping inflation. But just as its name suggests, this inflation has a mild effect on the growth of an economy. This inflation price has an increased rate of 3% or less per year. To further understand it, the Federal Reserve stated that when prices go up by 2% or less, this is advantageous to economic growth. The next is walking inflation, and this makes prices rise by up to 3% to 10% per year. And we don't need to be told that this would be harmful to the economy. This rate of increase will leave people panicked because they have no idea when the increase will end. So they will keep buying more than is needed to store. And doing this will raise commodity demands without the availability of products to equate it. The next stage of inflation is referred to as galloping inflation, because the price increases by a price rate of more than 10%. And what this drastic price increase brings about is damage to the economy. Imagine having a price increase higher than 10%. What do you think would happen? Employees wouldn't be able to keep up with this price increase, and businesses would also be greatly affected because money has lost its value. Foreign investors would sell their entire stake in this country at this rate because the economy is no longer profitable for their investment. This means that the economy loses the capital needed for the country's progress. Hyperinflation is a highly uncommon form of inflation that results in exorbitant price rises. You can anticipate monthly increases of more than 50% with this type of inflation. This kind is extremely uncommon and is typically observed when the government prints money for war. The American Civil War, which caused hyperinflation, serves as a representative example. According to experts, it's advisable to purchase gold or currency that isn't linked to the dollar while your economy is experiencing hyperinflation. And here comes the main part. How does higher inflation affect an economy? This is why it's said that the result of inflation in a particular country can either be positive or negative, and this is also dependent on how fast the price rises. Let's take an in-depth look at what higher inflation really does to economies. Number 1. The assets of an economy will be inflated or deflated. When there's inflation, one shouldn't expect the same effect on all the assets in an economy. The effect it would have on home prices could differ from oil prices, while gas prices would differ from commodity prices. One could increase in value while the other loses value. A typical example is the prevalent gas price inflation in the United States, where people are complaining bitterly about the expensive cost of transportation. Also, during the financial crisis of 2008, home prices deflated by nearly 20%. Number 2. How does inflation affect the stock market? Do you want to benefit from inflation? Then try investing in the stock market after some thorough research. This is because when there's inflation, the price of commodities produced by the company increases, and the value of the company that makes the commodity is also likely to increase every year. Therefore, holding stock in that company is a good way to protect yourself from being negatively impacted by inflation. The many variables that are producing inflation will have an impact on its overall effects. However, as businesses modify their operations to increase expenses in the supply chain or production process, it typically results in rising stock values. This might occasionally lead to instability and price changes. Consult a financial professional before deciding whether to buy or sell equities during a time of rising inflation. Number 3. Your retirement savings will lose value. Are you planning your retirement? Then you need to be wary of the effect inflation can have on your savings. Your retirement planning may suffer as a result of inflation. To maintain a reasonable amount that would sustain you in your retirement, your target amount must increase with time. In other words, as time passes, your money will purchase fewer things. Save more than you anticipate needing to be ready for inflation throughout retirement. It's also crucial to start saving as soon as you can to take full advantage of compound interest. Number 4. The Treasury bonds you hold will decrease in value. Do you own bonds or treasury notes? Then you must diligently keep an eye on inflation. As you're aware, these fixed income investments provide the same annual payout for one's investment plan. Therefore, these assets lose value when inflation increases more quickly than their rate of return. As a result of the rush to sell them, their value is then further diminished. Most mortgage interest rates will rise as a result. Higher rates cause your investment's value to decline. Additionally, they raise the cost of financing the U.S. debt for the federal government. Number 5. Inflation causes expectations of future inflation to rise also. There's always yearly inflation expectancy in an economy, and this is the healthy type of inflation, which is mostly at a 2% rate. This type of little inflation is healthy, but when there's a sharp increase in inflation, future inflation expectations will remain high as well. This will result in employees requesting an increase in their wages, which will cause business owners to raise their product prices. A typical example is the 1970 inflation expectations that happened in the US. This raised annual inflation way past 13% by 1980. And the federal funds rate above 20% by 1981. But a question arises here. Does this mean there's nothing to benefit from inflation? Actually, there is. First, when there's inflation in an economy, a fixed-rate mortgage remains the same. In periods of inflation, when an individual has a fixed-rate mortgage, there will be a great benefit because the stated value of their monthly mortgage payments will be reduced over time. For instance, if your mortgage payment is a fixed $2,500 per month for the duration of 25 years, but since the value of that $2,500 has decreased over those 25 years, it will be a case of you paying less than you ought to. But this concept will only be valid when your income rises as the rate of inflation rises as well. People who have fixed-rate mortgages will have the advantage of repaying them with inflated money, and this has reduced the amount to be repaid. Therefore, if you have this type of mortgage, then inflation will not affect you in any way. However, if you do not have it and you need a mortgage, consider getting a fixed-rate mortgage. When inflation is the creeping type, its effect is beneficial to the economy. The creeping type of inflation is of benefit to the economy because it has just a mild effect, and that is healthy. Because people are expectant of inflation, this drives them to spend during that period, resulting in economic growth. To this effect, the Federal Reserve sets a 2% core inflation rate, which drives economic growth. Are you aware of the effects of inflation? How has inflation affected you? Let us know your opinion in the comment section right below. Also, if you want to watch more interesting videos like this one, then make sure to subscribe to our channel. If you love this video, make sure to hit the like button and share it with your friends. Until the next video, stay tuned.